Good morning, everyone, and thank you for joining us on Morning Markets from True Potential. Today, I just wanted to reflect very briefly on the third quarter, how asset markets have performed, and also think about just looking at some of the movements that we've seen over the end of September. I think really when we look back on the quarter, it was very much really that all of the excitement was concentrated in September, where we've over the past number of months really discussed the lack of volatility in asset markets, be that in equity markets or in bond markets. September really brought that more to the fore, where we did start to see more volatility come into asset markets, both equities and sovereign bonds. Very much, however, driven by those factors that we've been discussing as an investment team over the past number of months. The direction of economic growth, how that's evolving and changing, inflation expectations, that word transitory that's been used so many times by central bankers, has that morphed into something that is slightly more long-term? The direction of interest rate policy as a result of that, and also just some of the political and regulatory dynamics that have been happening in the background. Those all coming together to create a more volatile environment through the month of September. If we look at just a couple of the aspects of that and think about where has it been most evident, we've all seen it in terms of the UK, in terms of some of those press reports around what's been happening in sterling. And you can certainly see in the chart on the screen at the moment, the weakness that we have seen in sterling over the course of the month. And that's a combination of many factors coming together that are drawing that out. But really the other side of that, what's been happening to other currencies, and I've compared sterling there on the screen to the dollar, and we have certainly seen the dollar increase over the course of the month of September. And you can see that in the following chart. This is the Dixie. It looks at the dollar on a trade-weighted basis, strengthening over the course of the month, I think up about 1.7, 1.8% on that trade-weighted basis. It does in this following chart, you can see how the dollar is back to its strongest levels that we've seen over the past 12 months. And those factors that I mentioned right at the start, in terms of economic growth, interest rate expectations, they're all playing through to influence the performance of currencies in terms of the interest rate differential between various different economies and the expectation when interest rates will increase. The other aspect that I wanted just to touch on at the end is political and regulatory development. We've spent a lot of time over the quarter discussing some of the challenges that we've seen from a regulatory perspective in China, the political clampdowns in certain sectors of the economy, be that technology, education, ride-hailing, all the way through to the construction and the property sector, things that have been influential there. Also in the background, coming very much to the fore as we got to midnight last night, was the US and the discussions there around the debt ceiling and the ongoing functioning and payments within the government. Needless to say, an agreement was reached right at the end of the day to kick the can down the road to the 3rd of December and maintain the spending plans there. It didn't deal with that debt ceiling, and that's something that I think we will, as a team, be discussing a little bit more over the coming weeks as we move through the negotiations there. I'll leave it there for today, but please do look out for our weekly investment note and also for the podcast. Many thanks.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.